Among the technical tools used in technical analysis, one you would often hear across the board is chart patterns. And also another one you can hear as well is candlestick patterns. Now, I have traded for more than 5 years and I've tried to implement chart patterns and I've tried to implement candlestick patterns such as bullish engulfing candle, the doji, and many other candlestick patterns. And in chart patterns, you have the head and shoulders and many other chart patterns. It was so difficult for me to trade. So difficult. And most of the time, you might wait for a long time for these chart patterns or for these candlestick patterns to happen before you take a trade. Sometimes they don't. Sometimes when they do, they fail. It used to be a gruesome time sitting down on the system to look at the chart, waiting for these things to happen. This is just Luck Trades, and we are still on fundamentals of technical analysis, and we are on peaks and valleys. There are two things that I'm going to teach you to take you away from the gruesome learning or waiting for chart patterns. Number one is what I'm teaching you now, which is peaks and valleys. And number two, we are going to handle wedges. These are, according to the Chesslock system of trading, what you need to profitably trade. It takes gruesome hours to stay through waiting for the head and shoulders to form and the candlestick chart patterns to come together. But I tell you, if you can go through peaks and valleys and understand them and your wedges, you stand a great chance of becoming profitable. Let us get into the charts and I will show you, like in fundamental ways, how to draw your peaks and valleys and what they mean to your trading. Let's go to the charts. The market always has a structure and it always respects its structure. If you have a knowledge about the market structure, you would be able to be profitable. Everything I've taught you so far, I am doing just on the monthly time frame, because once we start breaking down things into other time frames, we would have been well into the advanced technical analysis. So bear with me as we orient you how we trade in Chesslock Trades so that you would make no mistakes. You will sit as a sniper when you trade with Chesslock Trades methodology, when you fully get the grasp. That's why we subscribe to holistic trainings before we arrive at where we should be. So peaks and valleys are your market structure. It's like the backbone of the market. You have to understand the structure of the market. It helps you to pick your levels. It helps you to understand what is happening in the market, in as much as your support and your resistance and your trends are showing you their own side of the story. The peaks and valleys will show you a greater part of the story, while your wedges shows you the action. So your wedges, when I teach you wedges, you understand the action of the market. But me teaching you the peaks and the valleys, which is as always time frame dependent, it shows you the structure or the backbone of the market. The tool we use to draw our peaks. Okay, let me first of all explain peaks and valleys. So peaks and valleys, they are your triangles. There are two types of triangles. this way. So this is your peak. And this is your valley. So why is this a peak? Just in lay terms, is a peak because this first point is here. Let me shift this away so that we don't confuse our, sorry, bear with me. Yeah, why is it not moving? Bear with me, guys. Yes, thank you. Yes, so this is your peak because this point is here. You know, a triangle has 3 points, so this is the focal point. This is why it's your peak, and your valley is over here because the first point is facing downwards. That's why it's your valley. So I want you to understand that your uptrends, your uptrends from your peaks. Anytime there is an uptrend, they form your peak. Uptrend, they form your peak. And anytime there is a downtrend, it forms your valleys. So this is your, let me duplicate this. So your downtrends from from your valleys. Let me put this valley on here. Maybe move this upwards. I want us to be exact the way we are always exact in our levels. So this is your valley, and it comes as a result of your downtrend, and this is our peak, and it comes as a result of your uptrends. So your peaks are formed by the upward movement of the market, and also the very peak of the market is still your resistance. Don't forget that. I want us to get used to this. If you are confused a bit, go back to the previous classes and listen to support and resistance so that we don't go back into it again. So your peaks form your resistance, which is formed by the uptrend. It's ironic, right? But that's what it is. Then your valleys are formed by downtrends, which creates your supports. So I want to differentiate this color to maybe, let's say, purple, and make this one purple as well. So let me repeat it again. Your peaks are formed by uptrends and they create your resistance, and your valleys are formed by downtrends and they create your support. And these peaks in the school of market structure will tell you when the peak is done. What I mean by that is a peak must be completed before a new wave in the market starts. If I'm speaking in parables, especially for my new traders, don't worry, when I get into the chart, everything will make sense. I'm just laying the foundation of what I'm trying to explain to you. But what I want you to take away from this is your peaks are formed by your uptrends and they create resistance. and your downtrends are your valleys are formed by your downtrends, and they create supports. And the peak determines where we are. The peaks and the valleys determine where we are in the market, and they help you make very wise trading decisions. They make you understand when there is a new wave in the market. So follow me, let's go to the charts, identify how to draw the peaks and the valleys, where they are, where they are placed in the market, and how they show us the wave in the market. Come, let's go to the chart. Before I engage with the charts, there is something I want to clarify. When you draw your peaks, this is your peak. And when you draw your valleys, this is your valley. Remember I said that the peaks create your resistance, which is here. Your valleys create your support. Also remember that below your peaks, it creates support as well. And then above your valley, it creates resistance. Let me differentiate these two so that we don't confuse the both. So this one is your valley, this is your peak. This creates your resistance, and below it you have your support. For your valley, this creates your support, and above it is resistance. So let's get into the chart and debunk every other thing that is happening here. Let me remove this. So starting from the beginning here, I want to create a barrier for you. Disregard everything below here. Let's start with here. So remember I told you that uptrends create your peaks. So this is a movement up and down to this point, right? But let's say you were in this market and the market was not up to this place. Let me create another barrier, so don't look from here down. So look at just what has happened here to this point, right? So if you were here, you would have seen that a peak is forming. And one thing you have to pay attention to as well is your highs. When there are two highs here, like here, you need to draw your peak or your valley. In the case of your valley, two lows. When there are two, you have to draw your peak or your valley to accommodate the two highs. And when there are multiple highs, you have to draw your peaks and your valley depending on the highest of them all. As we go along, I believe that we are going to see examples of this. So let me draw the peak in this case. So the peak here is, you know that you have a support here. I draw this support here so that you know where I'm starting from, and we have this high and this high, the two resistance, right? So I will start from, I'll pick up my triangle, and then from here to above and back to the origin. Normally when I draw this, so that I'll be exact, I like drawing the supporting line. So this is the place I'm starting. So this is the support. So let me draw this again. Pick up my triangle from this support to the high and then back to the support again. So what you're going to now do is to modify the upper part to fit the highest points. So this is your peak. Now you see that why we don't have any low is because there is no low from this point. Remember I told you to think of this market as though it stopped somewhere here, from here to here. So your only reference low is this one. These ones don't exist for now. So that is how you draw your peak. So according to your peak, this is your resistance. Let me change the color. and make it white. According to your peak, this is your resistance, and here you have your support. So let me remove this. So let me now remove these things, and let's go through the market with our peaks and valleys. So let me make this very visible. So as we've drawn this now, you see that this is accommodating, sorry, this our wedge, our peak is accommodating the two. Make sure it's touching them at the edges. If you have the wicks, you put them on the wicks, because most of the time the wicks are the longest. So you see, if you look deep into this chart, you see that it's accommodating the top of the peak, and for this one it does not have any wick, so it's just touching beside you don't have to measure it, just touching beside here, and it's accommodating the whole market. So when I told you that the peak and the valley, they are market structures, they show you a new wave of the market, right? So you see that when this market now rose here, creating this peak, then it came to this point and it didn't hold. This level didn't hold at all, or the base of the peak didn't hold. It led to the break. So the break of this peak is done, finished. This peak has been forgotten. We are no longer in this market structure. Because if we were in this market structure, the price of the market will be lingering along this market structure. I hope you understand it. But once the market is able to break above or break below this market structure, that is this peak, then we are done. It means we are finished with this triangle or with this peak. Or if it was a valley we drew, we are done with the valley. Your eyes and your target are no more on this particular valley. It has to shift, maybe drawing a new valley or looking for a valley from the past. Talking about valley from the past, I'm going to teach all those ones, but we are focusing on how to draw, what they tell us, and how we can use them to analyze the market. So if this valley has been broken, I'll leave it there and let's go again. So this market broke, went up, didn't stay long enough to form anything, because you have to really wait for your valleys and your peaks to form. You don't just draw them because you know how to draw them in the charts. You have to wait for them to form so that you can use them to make decisions in your market. So nothing really formed here, and then a downtrend happened here, then the price went up. You see, immediately this price went up. What do you think it formed? It has formed a valley. I'll prove it to you. You remember that valleys are formed on account of downtrends, right? This was an uptrend, the first upward movement of the market. That's why it formed a peak. But from here now, it started forming a valley. And let me explain that, or let me draw that for you. There was a dip down here and a high happened, and it didn't stay long enough, and there was a movement downwards, and then there was a movement upwards, and then let's say the market was around here, you would have seen the valley formed in some ways. Let me draw it for you. If you pick your triangle, you see this place, you pick the roots down to this point and down to that point. It has formed a valley there. This is a valley, right? And as this valley formed, with this movement down like this, it formed a peak as well. I'll change the color of it. This is the peak. But to be honest, this valley has a technical implication, but I'm not going to go deep into this valley now. But look at your peak as well, and then you see that this peak has broken down. don't worry, when it comes to application, I'm going to teach you how to apply it. Don't try to roll your mind around how to apply it. I am here for you to teach you everything. So, but I just want to build a good foundation before we enter advanced technical analysis. So you see that this kind of peak I drew here now, it's not like this one. This particular peak has only one high. So it forms just one high there, right? You see? So you see that it was broken down again. Sorry about this one. It was broken down again, forming this is a valley that didn't complete. Let me draw it for you. Forming a valley. If the valley was complete, we would have seen something like this. But you see that there was no completion of the valley. It broke down again, forming what again? A new valley. Forming a new valley down to this. No, sorry. Formed the valley, it broke down. Okay, it broke down, forming this. There was an uptrend, forming a peak. So you see, you don't have to cram this, to be honest. It's based off of you reading what is happening in the market, because I am not going to edit this video. That's one thing. But I'm not saying that you should cram this. You need to understand why they are forming. Like for example, this valley that formed there it has a technical implication. This valley that formed there, and with time you get to understand what I'm saying. Sorry, you get to understand what I'm saying. Then the peak here, you see the peak formed there. As this thing moved down like this, there was an uptrend there, forming your high, right? Forming your high, forming your low here. So already you can draw it with your eye. So if it's hard for you to identify, what you can do is you draw your support and your resistance. You identify your highs and your lows so that you can draw up your valleys and your peaks. So this is a peak right now, as you can see. So you see what happened in the market? The market respected. You see what I'm telling you about respecting, or the market structure being respected. Just like here, you see that the market structure was not respected. It broke down to this place, forming another one. The market structure was not respected. It formed a valley here, but it didn't even complete to form a peak, right? It broke down, further broke down, forming a peak after this uptrend. Because if you are in this market, if you draw a peak right around here, you will not now be drawing the peak in this particular time frame. That's what I don't want to go into. That would be way back, and like maybe 1 day time frame or 4 hours time frame. You see a very nice peak formed in this tiny region. Let me just, for the purpose of exposure, this is a peak as well. This is a peak. If I can change, if you permit me to change the color to maybe this way. Okay, sorry, I have to change the inner light to make it pronounced and also make it same color as this. So this is a peak, but it's in a shorter time frame. That's what we'll do in advanced technical analysis, so don't worry about it. So you see that the market just kept respecting the structure until it broke above. You see, let me draw the line so that you see that it broke above. You see, it broke above it. So immediately it broke above it, is forming a new one, a new peak. So you take your stuff, see, forming a new peak, and this is the down of it, right? So we are in this peak now. It hasn't formed any valley. So, but you see the formation of the valley. Can you see it? The movement down, breaking below here, led to the formation of the valley. So the market respected, came up. You see, it didn't go above. The market didn't go above there. You see, it still respected the peak there, or the resistance. It didn't go above, and the market went down, forming a valley. So you remember how we draw a valley? This one is the first obvious valley this market is forming from the top. You can choose any of these tops, doesn't really matter, but it's best you choose the highest there, then down to this point, then to this point. If you want to be exact, make sure you draw your line. You draw your line to the highest point. Then before you draw your, make sure you're exact with it. It has one single point, which is somewhere here. And then you take your stuff back to that origin there. So you see, let me reduce the lights on this. So when I do my editing, try to understand it, because it's good you keep your charts with different colors. I'll still teach you color coding of your charts and saving of templates. All of these things are very important. So you have to be sophisticated enough to trade and systematically work out your charts, so that, because you're charting, like I've said this earlier ago, your charting is your money in this trading. You're charting. If you are using the chess log system, the charting is your money. So we know what we are doing. So with this, tone it down so that you can see the candles. Yeah, so that's it. So now this is our first valley, and you see where the resistance is there. Let me remove the one that we've passed so that we don't get confused. So the market kept respecting until it broke down. You see, let's draw the support and see. You see, it broke it down. So it gave birth to a peak, right? So because the breaking down caused the movement up, it didn't start going down again. If it started going down, it will form small more valleys, but since it's going up, uptrends give birth to peaks. So this formed peak. You choose the highest one there. Then if you want to accommodate everything, you accommodate, right? So you see it's accommodating it. Yeah, so sorry, I'm not exact here. So if I want to get exact, I have to draw my support line, and it helps me to get exact. Yes, thank you. So that's our peak, and then you see the structure we are in right now is this peak here. Sorry, yeah, we are in this structure now, and then partially in this structure as well, because you remember that this structure has not, if you talking about breaking, this wasn't broken, you know, this support, if you remember our support, let me change the color of this to yellow. This support line was not broken at all. It was not broken. You remember when we were doing support and resistance, it was just tested, so it's still valid. So this structure is valid. This is not valid. This is not valid. This is not valid. This is not valid. Broken. So all these are not valid. So these are the valid market structure that we have. And as I'm looking at it, there's a world of information I'm getting from it, but this is what we are going to do later on. So if this market ever moves and breaks above this, it creates a new stream of market flow. If it comes, breaks below it, it creates a new stream. Remember, just like here, immediately this one that was created here was done. You see this one here, it broke down, created a new one, then created, do you understand? Like immediately this peak was broken below, it gives you a new market flow. That means change of market environment. So, but now on a general term, because these are what is happening immediately in the market, right? But there is a general a general peak or a general valley depending on whether the market is on a perpetual uptrend or a perpetual downtrend. In this case, this our dear market is on a perpetual downtrend. And remember that downtrends create our valleys. So there will be an encompassing valley for this market, of which if anything happens to that encompassing valley, it will change the flow of the market in the general sense. What we have done, analyzing the little peaks and valleys that we were picking out from here, is what is happening in the market. Like as you are looking at it, what is happening in the market, just like the way when we are talking about our support and our trends. You remember that after breaking the trend down, everything happening, we now came to the general trend of the market, and it was still this same market. You remember that I told you that this market is on a perpetual downtrend, although an uptrend is creeping in, but it is in a perpetual downtrend. But now we have taken our peaks and our valleys, and we have with them shown you the story that these things can be telling, because it will help you analyzing the market going forward, what is happening immediately. But on a general sense, there is a structure this market is in now, and then being that it's on the downtrend, it is having a big valley that is holding it right now. So let's get into that. So when you now want to draw the general valley of the market, because you remember that downtrends create your valleys, you bring your, now you don't need to use these two now, the highest point and then the lowest point is here and another low point is there. So you have to draw to accommodate this point. And then let me be exact, please. This is our highest point there. I'm exact with it here. And then I'll have to make it to align with these 2 points. Then see another valley there, same point. If I want to align, let me see whether I can align everything. I'm coming, guys. I want to see whether I can align, make it bigger, because it has created a bigger, sorry, yes, correct. I have to align those ones as well. Yes. So you see what I did? I try to align the levels that are here, just the ones that you can align. You don't need to be exact, like there is no particular level, is the ones you can align. Do you understand? It's just on a broader sense. So this is it. So you see that when I drew this, it was on this at a particular time, then the market broke away from it. So if you are tracking the wedge, if you are tracking the valley, you have to accommodate your lows. So I accommodated this low and it has been broken, so I had to expand my valley to accommodate the sides, and you see that we are here now. So this one is not relevant, it has been broken. This is where we are in the market. So I had to make it smaller so that I can draw it. So this is where we are in this market as we speak. This is where we are. So if this market, I know some people have this theory that one market breaks on the side, maybe that is going down. When it breaks above, that is going up. While all these stories are true, but it will take a long time for these things to happen, although it is breaking out beside it. But As it's breaking down beside it now, there is a level there, right? I'm talking to my advanced traders, right? There is a level there, and you don't know whether the level will push it up. There's a level here, and there's a level here. You don't know what will happen. So if you have this rule that immediately the market breaks out of a peak or a valley on the side that is going down or above is going up, you don't really know. It depends on the information you get from other tools of technical analysis and you make a decision. But potentially this market, to be honest, can come, hit this level and reject and start going up. It could come, break this level, hit this level, and it will start going up. It may come, break this level, break this one, hit this level behind and start going down. But these are options that can happen in the market. It could come, hit this one and start going down. It could hit, break above it, hit on top of it and start going up. There are so many options the market can, so many things the market can do. And when I train my students, I tell them, you don't know what the market will do, but by the time we teach you advanced technical analysis, you would understand the points to take your trade and the place that has the highest percentage to give you a profitable trade. After your analysis, you place your trade, close your laptop, and you go and sleep. Because one thing I enjoy about the methodologies that we use to trade in Cheslock Trade is that it keeps you away from the system. You invest time and chat. After chatting, when you find your point of high value trades, you make a decision. Do you want to take it on a limit order or do you want to take it on a market order? It's your choice. You have options. If you want to take it on a market order, you put your alarm and relax. When the alarm hits, you come to your charts and you trade. But if you are looking for chart patterns, you have to sit down and actually, or maybe you're looking at what is it called, your candlestick patterns. You sit down and wait for them to happen before you take a trade. But once you understand how to analyze the market using what we do, you analyze the market, you can take on a limit order, or if you want to take it live, set an alarm. When the alarm hits, you sit down, and then when the level is hit, you take your trade. So I hope you understand peaks and valleys. Please take advantage of our support group, a Telegram group where you can ask your questions. I am more than happy to explain anything in the form of a video. The people that are in the support group, they enjoy it because when there are questions, I will further explain using a video, but I will not be posting it on other platforms. I'll be posting it only on the support group. Thank you very much. Don't forget to click the like, share, subscribe to our channel. It improves our algorithm, helps us to share this trading trainings. I wish you well. See you on the next one.